Good afternoon, and this is another interesting session that we have planned out for another about 60 minutes. We are living in extremely turbulent times, and I think every day is a new day at this point in time. The world is in complete turmoil, and who else to talk us through this difficult times apart from Navneet Bunot, CEO of HDFC AMC. Navneet, good evening, and thank you for joining us this evening.
Good evening, Saibal. Always a pleasure talking to you.
Navneet, pleasure. It's our pleasure, and I think thank you for giving us time. I started off with the preamble, right? It's a difficult time, so Navneet, give us a bit of your perspective. What is happening in the world? What does it mean to India?
So you're right. I mean, you started by saying that we are in such a volatile world. I know the word is a cliched word when we say we live in a VUCA world. That's volatile, uncertain, complex, and ambiguous. But we indeed live in a VUCA world. I think there's a saying, may you live in an interesting time. I think probably talked about the time we are living in. And it's so difficult to even predict what's likely to happen tomorrow. I think that the events have been kind of like evolving every day, and every day looks like a different one. It would have been unthinkable till few years back that so many of the nuclear parts would be in an active war. So you look at like U.S., Russia, Israel, Iran, and there are so many other conflicts which don't even get a headline because larger ones are happening. There's like the trade war between US and many on one side and many other countries on the other side. So world is indeed, and then you have, so one is geopolitically the world is realigning. On the other side, digitally it is redesigning. The disruptions that have been brought in by AI and some of the other technological advances. The world is demographically diverging. A large part of the world is dealing with an aging population, which will create many challenges for society, for policymakers, for economy, so on and so forth. World will have to decarbonize. I think climate change is for real. Whatever Trump says or believes, it's real. Over the last couple of years, every year I write that this was the hottest year in history. And you look at the extreme climate events in different parts of the world, they have been increasing. So there are like so many deleveraging. Large part of the developed world has got levels of public debt which would have been like unthinkable a decade or two back. The way central banks' balance sheets expanded, the way public debt has gone up, and all of these have their repercussions on various markets, and we have seen it manifesting in various ways in different markets. So it's indeed an interesting world to say the least. I'll
Navneet,
just make one point in
sure, sure,
short.
sure. Please,
The
please.
world we are in, there are three things about the world we need to keep in mind as an investor. Number one is everything is unpredictable. As I said, I mean, go back in last 5 years. At the beginning of 2020, it was almost impossible to think that we are going to hit with once in a century health crisis, once in a century economic crisis that we had. 21 starting was like, okay, we will find some solution to it. Things would be back to normal. But the second wave was lethal. 22 was like, okay, now the world is getting vaccinated and things would be good. There would be a revenge buying, revenge consumption, travel would be back, businesses would be back. And then you got hit with like Russia, Ukraine, which led to inflation reaching unprecedented levels. I think the like highest inflation in 40 years, and in US, Europe, Japan, many other parts of the world, and it had its own repercussion. 23. I mean, I can go on last 5 years. At the beginning of the year, the events that happened would have been almost like very difficult to predict at the beginning of the year. So number one is everything is unpredictable. Second is everything is faster. The macro cycles are getting shorter and shorter, and it's very difficult to kind of like predict them. And the third is everything is questionable. Now there is so much of news, so much of data, so much of information that get thrown to you. One, that we are in an uncharted territory. On top of that, second to second, you get so much. Now, how do you really make sense of that as an investor? What exactly is the signal and what is the noise? And that's where the real game is. That's where the real test of a good investor versus not so good investor really comes in. It's not about knowing what's happening. It's not about getting more data or more information, but I think it's building the wisdom of like how to really navigate uh, things at a time when everything is like unprecedented. Everything looks like we are in an uncharted territory.
You've set the entire background to this conversation and to so much that is happening. I think you've really set the foundation for it. And I mean, I'll definitely come to the war and obviously ask you a few things about how that's impacting us. But I think I'll go back to some of the themes that you were very passionate about and you mentioned in your opening conversation. I think you spoke about AI. You, in many ways, spoke about workforce transformation. Talk to us a bit about these things from a global context, and obviously India. And then, as an investor, how does one even try to play some of these things out?
No, that's an interesting thing to start with. So I think it was 2022 when Gen AI was my person of the year, and I said that I think it's one of the most transformative thing that humanity has dealt with. So humanity has seen agricultural revolution. I mean, and we adapted to it over thousands of years. We saw industrial revolution, which again, I mean, gave us several decades to kind of adapt and all up to it. The third was the information revolution over the last 70, 80 years. This is the intelligence revolution. And this is really big. And the another interesting aspect is that the time is getting crunched, right? I mean, within 2 or 3 years, what we have seen, the way it has shaped and the way it's impacting many industries, many businesses, many things is absolutely, again, using the same word, unprecedented. And we may end up talking that word many times in today's conversation. And I said, because you asked about like jobs, work, etc. So machines are taking over tasks, which I said, anything which is dull, anything which is drudging, and anything which is dangerous will not be done by humankind. And now by industrial revolution started that, and the information revolution made that even more deeper. And now the intelligence revolution will ensure that anything which is dull, drudging, and dangerous will not be done by humankind. But now even the cognitively deliberative things, several of them would be done by the machines. And when people ask me that is it underhyped or is it overhyped, I said it is both. It is underhyped in terms of the impact, the ultimate impact that it will have. It's overhyped in terms of, let's say, the way some of the valuations would have moved. Because I think, giving a parallel with the internet, several of those companies of the dot-com era don't even exist today. Several of the smaller ones have become giants, and we are going to see the same. But the impact of internet was like very, very deep. And then we have seen over the last like couple of weeks, industries after industries feeling the heat that what some of these models can do to their business models. Lot of things where a moat has been built by a certain business, and suddenly you will see that it's not only one task, but the entire chain of tasks that used to be person job description can be done by the machines. Markets always overestimate technology in the short run, but they underestimate in the long run. And I think we are underestimating in the long run. The other thing that I've mentioned, that it's very interesting that what this revolution is doing is, this is the intelligence revolution. And what will happen, that things that are done by brain are getting disrupted this time. And my view is that things that are done by hand and by mind actually will become very valuable. Mind is like emotions, and then hand is like anything you are doing creative, or anything with the hands. Actually, they'll become more powerful. And I said that like there is a government PM Vishwakarma scheme, and they should substantially increase the allocation to that, because those are the ones that won't get disrupted easily by by the AI. And second is, as I said, the mind emotion. So people I mean, a lot of jobs like, let's say, a nurse, a physiotherapist, a stand-up comedian. I mean, the people who are storytellers, all of those are going to really flourish in a very, very big way. So both like the Vishwakarma and the orange economy that finance minister talked about, they are going to flourish in a very big way. The another way to look at it is like internet. India didn't invest the way, let's say, in fiber and network and a lot of other internet infrastructure, but we were a very big beneficiary as a country. And there's a high likelihood that same thing happens with AI. So we are not spending hundreds of billions of dollars like hyperscalers and all, but possibility that we are the best adopter, we are the best use case capital of the world, and a lot of problems that we could not solve for decades, we solve at population scale by using AI. Our digital public infrastructure is a classic example of like without much investment that rest of the world did, how we benefited immensely as a country, as a society.
Navneet, couldn't have agreed more. I recollect that we were talking to the head of consumer bank in India earlier in the year, and he said there's going to be the over supply of strategy, and people will look. I mean, people will be respected as people who can really execute because there's so much of information available, analytics available. You can really get a complete overload of some of these things. But how are you really able to execute in everyday life is what will matter. Navneet, I'll talk a bit about one of the concerns that, of course, has come up, especially from India context, and this has been on the knowledge economy and the services sector. I think for very long that has been a very large contributor to our growth engine, large contributor to economy from an employment point of view, and hence consumption. So it's been a very large sort of engine driving us. Given this real rise of AI, is there a real threat, real challenge to this sector? Do you see Indian companies and that sector specifically is really geared to be able to counter this challenge?
So jury is still out, but I think if history is any guide, in last 30 years, we have seen that every time we wrote off the industry, they came up with a solution that made them more valuable, more powerful, had wider reach than before. I remember, I mean, going back in 90s where people thought it's just the body shopping and what will happen post Y2K. When the ERP came, these guys are only used to manage, or let's say when the cloud came, these guys are only used to manage the old world infrastructure. What will they do in this new world, or when the whole move towards the smack, the social media, the cloud analytics and all of that, what will they do? But so far I think they have been able to kind of like provide solutions and create value for the clients, for the end clients. I'm sure this is a much bigger wave, and we have to see how they adopt this. There's a See, AI is probabilistic, while the organizations or their large clients, large organizations need solutions which are deterministic. I mean, you cannot publish your annual report by saying that, I mean, 99% probability that it is not hallucinating. I mean, a CFO cannot produce that report. So, and of course, the another aspect is that because of the AI plus quantum computing, the advances which are happening will increase the cyber risk manifold, multifold. I mean, there will be an exponential increase, whether it's a deep fake or all kinds of risk which are going to emerge because of the AI and quantum computing leading into the bad actors, into the hands of bad actors. So for organizations, there is like another, I would say, reason for them to have somebody who can synthesize various systems, various processes, various workflows, and put that infrastructure in a very secure environment. There would be things, workflows which will get disrupted, which will get easily done. Maybe there are parts of the organization where let's say the outsourcing which is happening can be done by, let's say, I mean, things which is done by 100 people today can be done by one person. But we have seen historically that every technological advancement lead to more demand than lesser demand for different kinds of solutions, and also the scale will increase in many businesses. Yeah.
So Navneet, you're saying that innovation shall definitely take place. The industry is known for it. I think that that entire sector is built like that. So innovation is fundamental. So innovation will take place. New kinds of jobs shall come. So the current jobs may change, but
Yeah.
new kind of jobs may rise, and that could be at scale, like you mentioned. And you talk about cybersecurity, etc. I think those are going to be large opportunities. And obviously, while people may move away and get technology and machines to do a large part of their work, there will be other kinds of work which will come in the way, which will be new, where humans would need to adapt and do new things. I think that very civilizational kind of a sort of perspective.
A
Um,
century
and
back, Saibal, I mean, if you only knew how to carry a horse carriage, or how to breed a horse, and then automobiles came, right? I mean, you had to adapt to the new world, right? I mean, if you could only do that and then couldn't reskill yourself, then of course you were redundant.
correct,
But I think
correct.
history of humanity has been, you have to give it to the human ingenuity. I think we'll adopt to it. 25, 30 years back, it would have been unthinkable that we won't see STD PCO, we won't see Xerox machines
Yes.
in every street, and so on and so forth. I mean, a travel agent, and so many of them don't exist today. But the same set of people, or their next generation is doing something else. Yeah.
No, correct. I mean, very well put. And I mean, I'm sorry, but I've already got a interesting question which has come up in my chat. So it says, what to do with investments in IT? It has fallen a lot, exit or hold.
Yeah, I mean, there is whole classic Schumpeter's creative destruction, and also, let's say, there's this guy Clayton Christensen. I mean, you should read like Innovator's Dilemma, and these two books. I would say the disruptions that are going on are like these two guys are like really very relevant after decades, and after like so many decades of Joseph Schumpeter. Industries, businesses, societies go through like constant creative destruction. Again, I mean, there were like many IT companies in 90s. The opportunity set increased, right? $1 billion industry became a $250 billion industry, but several of them don't even exist, despite the meteoric rise. I mean, despite the huge rise in the scale and size of that business. Same thing is now. I think those who are looking at this technology and many other developments are investing rightly. I think several of them would still have a much bigger opportunity than what has ever existed. Yeah.
Interesting, Navneet. Like I said, I think I've got hordes of questions coming up on what to do and what not, but I'll cover some stuff which is slightly more macro, and I think that's where I think we'll really lean on your view. I think this question is really about the geographical rebalancing that is taking place. I think for many years we have lived in largely bipolar uh, groups, right? So the NATO at some point in time, the Warsaw, and even later, I think they have been largely, not bipolar, but it's not really very large multipolar kind of environment. And suddenly we are seeing a situation where there are far more bilateral
Yeah.
arrangements that are coming up. What does this mean for the global economy, and for someone like India, which is of course grown rapidly over the last few years, both on internal consumption and of course focusing on exports, trying to build its manufacturing capability. How does this impact India? Does India stand to benefit from here, or is there a risk to what the growth path is?
No, that's very. First of all, in the world, our generation, Saibal, I strongly believe, has been one of the luckiest generation in human history. We had couple of these decades from 1980 to let's say 2020, where we saw unprecedented peace and prosperity in the world. Now talking about the prosperity at a scale. So when let's say Europe became a developed part. I mean, Europe got developed. I think a few millions who benefited from it. US maybe few more millions during the previous decades, or let's say Japan, some of these countries when they became developed countries, and they saw a lot of prosperity. After 80, thanks to like let's say post the China joining WTO, India opening up in 1991, thanks to globalization, What we have seen is like a billion plus Chinese, a billion plus Indian, a billion plus, I mean, those who are in Latin America, Eastern Europe have seen, I mean, a growth which has been unprecedented in human history. And we have largely been, except like few small events here and there, has been like really peaceful. And a lot of these institutions that got built post World War II, whether it was like NATO and those on one side, the UN, UNESCO, WTO, WHO, COP, I think for sustainable growth, all of these have played a role. None of them were perfect. There were a lot of imperfections in them. For example, India has been arguing that we should have been part of the Security Council. No reason that a country of our scale and size and the largest democracy in the world should have been part of it. But still, I think the world has been like, I would say, largely predictable since, let's say, the World War II. There has been, let's say, those two big powers and all. Now we are going through a massive transition in last couple of years, and now we are in completely uncharted territory. Several of those blocks that got built over the last several decades, now they are breaking. The lead architect of all of these, the multilateralism, was US, and now they are retreating from global stewardship, and they have a strategic inwardness, and this is accelerating a lot of fragmentation. And look at what's happening in Europe, in the heart of Europe, and in West Asia, in Latin America, and as well as like I don't know in which direction we are moving. So I'll just take a step back. A lot of people ask me what exactly is happening and why. I mean, the certain kind of leaders are getting very popular world over. And few years back, I wrote that we've been in a world where if you are rich, you get bailout, or maybe the stock market helps you. If you are rich, you get bailout. If you're poor, you get handout. If you're somewhere in the middle, you get left out. And a lot of these developed countries, suddenly the anti-incumbency has become big because there's a leftover feeling of a middle class that globalization benefited the world at large, but there have been the beneficiaries and maybe the losers. Maybe the losers put blame on their leaders. Like suddenly everybody is saying that how America has made so many strategic errors. Not really. You have benefited so much from the global prosperity and global peace. So this is like an uncharted territory. I think India has a strategic advantage. I strongly believe that one, from an economy's perspective, we have fortified our balance sheet, whether the fiscal balance sheet, I think the monetary policy framework, the inflation targeting framework, so that inflation is well under control. On the external side, I think the work that we have done on fortifying our balance sheet. So, and the bank's balance sheet, corporate balance sheet, all are in like good shape. So overall, as a country, we have fortified ourselves better, and over the last couple of years have tried our best, whether through the PLI and other efforts to participate in China plus one opportunity, or leveraging maybe the strength of the domestic consumption and domestic investment, so on and so forth. So I think world will look up to India from a longer term perspective, that there is a democracy which is open for dialogue, which is kind of like probably the next big frontier in terms of both will be the largest supplier of labor force to the world and will be the largest supplier of new consumers to the world, going from $2,500 to 5,000 to 10,000, and will be the largest supplier of labor force to the world in a world which is going to face, notwithstanding all the AI related job loss discussions, maybe in 5 years time we'll be discussing a big shortage of human beings in the world, in large part of the world. I think fertility is like a very big challenge staring at humanity. So I think India, with its democratic setup, skilled people, hardworking people, and now that language is not a barrier because you have the AI, so you can work anywhere, speak anywhere, any language. So I think India has the potential to become, and it's up to us how we take full advantage of this situation. India has the potential to become most reliable and trustworthy farm of the world, most reliable and trustworthy factory of the world, and most reliable and trustworthy front office of the world. All three opportunities, which I can't say for many other parts of the world.
Navneet, again, couldn't have agreed more. And that's a very profound perspective, saying that the opportunity is really opening up. It's up to us to see as to how we sort of lever this opportunity and get the best for India. One of the things that we woke up to, especially at the end of last year, and of course that's continued for some time, has been this entire weaponization of finance, of
Yeah.
trade deals, and I mean, popularly popularized by the president of the United States as tariff. But um, we've of course seen a lot of volatility in even the policy around tariff for various reasons. My question is not so much about what has happened, but my question is in terms of what is going to be expected from here on, and linked to the bilateral question.
Yeah.
Do you believe that this weaponization of finance through trade is going to be there for some time from here on? I think countries are going to use their finances to sort of strike deals, or to block out other competitors in the world game. Is that going to be a normal from here on?
You're absolutely right. I think the weaponization of dollar, weaponization of trade, weaponization of, let's say, chips or technology, weaponization of rare earth materials, all of these are like serious risks that we didn't kind of like envisage till few years back. As I said, 30, 40 years, we lived in a time when goods, labor, capital, and ideas moved freely. Free, I mean, more and more a freer world. And particularly on the weaponization of dollar and trade, what US is doing, I've written that with great power comes great responsibility. When you are a reserve currency of the world, when the whole world is trusting you with their money, that two independent countries having their two currencies, having their two a different monetary system, they trade with each other in US dollar because they trust you. You are the deepest market. You have a great the whole, I would say, trust of the world. That enormous responsibility on your shoulder to ensure that that trust is never broken. And in last few years, what we are seeing, the whole institutional degradation is clearly visible, which is in one way manifesting in people looking for alternatives, whether it's what's happening in gold or silver, or in different ways. I mean, there was this whole rally in the Bitcoin and others, was also like people are looking for some alternatives because the trust in dollar, the trust in fiat currencies got impacted. But all this weaponization and plus the COVID and plus, let's say, the pager attack by Israel, where people are getting worried about the safety, security. So the world is moving from the most optimized supply chain to a more reliable supply chain, which means people use this word deglobalization. And I call this is not deglobalization. We are entering an era of globalization of localization. I call this, Saibal, globalization of localization, that I want to produce more locally. I want a more safer, more secure supply chain. So from like hardcore offshoring and just buy from wherever it's available, the cheapest and fastest. I want like friendshoring. I want like onshoring because I just don't trust somebody else. And as like the alignments are changing. So the whole supply chains are getting redrawn. And that's why I said that whether chips to ships, or a few years back I wrote chips to ships, wood to food, and crude to coal. Everything is like just in time, maybe over. Think about it, like if Iran does something on the oil side, the Strait of Hormuz, I mean, oil prices can go to any level in the short run. So every country needs to kind of like think strategically of their energy security. So for three things, like I told you, three F in a different manner, but the three things: food, fuel, and fighting ability. These three, I think people will produce more locally, or they want to have more diverse supply sources. You don't want to be too dependent on, for your people, I mean, food on other people. Fuel, energy security, you want to have and have more sources, diverse sources, and fighting ability, which is like your arms and ammunition, because you cannot trust
Anyone
anyone.
else?
So,
Anyone
which,
else?
it's very interesting. We see all of these headlines like what world we are in, and you get scared. But beneath that, if you think a little deeper, and my view has been that we are actually have entered, not entering, have entered a big investment cycle, which is driven by four things, rightly or wrongly. Number one is the defense spending, which is going to increase for next several years. No country trust their neighbors or distant neighbors where the attack is going to come from. So more defense spending, more supply chain reorientation. As I said, that you want more safer supply chain, which means more investment. Third is the climate changes for real. So whether it's the EV transition, whether it's like transportation, electricity grids, and all of that, they are undergoing a transition, more investment. And last but not the least is the whole AI and quantum computing, which requires like massive investment. So these four put together have actually led to more investments in the world. So while on one side you see all the ugly headlines on geopolitics and all, but beneath that, there is a new investment cycle that's already begun.
That kind of automatically gets me to another interesting part of what we have seen, especially over the last year, actually, and this is the rise of commodities. I think suddenly there's been this rise of gold. Of course, gold, everybody's is running behind gold. Is this a natural shift? Primarily because of the challenge that you called out on reserve currency, saying suddenly because of the turmoil that's happening globally and US's pull policy. Do you see this to be a natural reaction to that? Is this temporary? Do we see this becoming slightly more moderated as we go forward and things settle down? Or do you see that at least for some time, people would still tend to gravitate towards uh, of the three Fs? Of course, a lot of that F is really commodities. So, is that where you think the world would go?
So I mean, the biggest lesson from this commodity rally is the humility about cycles, right? And the um, um, I mean, the as they say, the diversification is the only free lunch available in investing. And the commodities provided a different kind of diversification, but each one of them. So as I said, that I think the concerns about the fiat currencies, the concern about like the rising public debt levels, particularly in the developed world, United States, and some of the other developed countries where the public debt levels are so high, rates are going up. Central banks this time are finding it very tough to deal with rising bond yields, because I mean there is like whole I wrote this return of bond vigilantes, because people are worried about the level of public debt in several of these large economies, and the rising geopolitical risk, which is leading to like the renewed interest in gold, and then it had its implication on the silver. Silver also have has the industrial usage, and then of course what's happening in copper, tin, and some of the other commodities. Off late, I mean, the gold was sorry, the crude oil was behaving very normally over the last couple of years. The demand supply dynamics were
Right.
in favor of like a stable price, but suddenly this heightened risk in West Asia has impacted that also. In fact, YTD, that's become one of the best performing commodity. And but at the same time, the thing that investor need to keep in mind is not to have a recency bias. Just because gold and silver have done well in last 1 or 2 years doesn't mean that you over allocate to these asset classes. They are prone to a lot more volatility, and they are prone to like long cycles, both bull market. I mean, the long cycle of a bear market also. Between 1982 and, if I remember correctly, 2002, the gold kind of had a slide from $800 to $230 at the lowest. So $800 became $230 per ounce over a 20-year period. Silver, if I remember correctly, I think first time in 1980s it crossed the price of 35. It was a all-time high. It kind of multiplied in a short period of time. And then it was 2011 when it crossed the previous peak from 1982 to like 2011, and it crossed $50. This time we have seen the price crossing $100 in the dollar term. And so we have seen long bear market also. You need to allocate, and several, when we launched Silver Fund, we had that discussion. We put up a very strong argument that look at the demand supply dynamics, look at the industrial usage, and then all of that. But we hardly got any money in our NFO. And now suddenly I see like everybody wants to allocate more to silver. And when I tell people that yeah, of course it has run up quite a bit, they say, "अरे सर आपको पता नहीं है ईवी में कितना यूज होता है, सोलर सेल में कितना कितना यूज होता है." इवन हमने यही लिखा था 3 साल पहले हमारे प्रेजेंटेशन में. But now
No, I think
you should
Naveen,
like over allocate. Yeah.
in fact, I think Naveen, it just gets us back to the original conversation when you said that irrespective of what's happening in the world, asset allocation remains the most
Key.
critical thing,
Yeah. Yeah.
key, and obviously a bit of dynamic, a bit of multi-asset kind of an approach is what works. Because if all of us would have invested in that manner, we would have had some allocation into gold and silver,
Yeah.
and we all would have benefited rather than a few of us, and would have come been there at the right time,
Yeah.
because usually all the investors come in at a time when the run up is already over. So interesting. I think you just need to stick to basics, I guess. I've got a lot of questions that are coming up, and I'll ask you that questions before that. There's something on energy, Navneet,
Yeah.
energy and energy transition. I think you spoke about EVs a while back, and we know that some of the global economies, China, for example, is investing into EVs. The very large buyers, they of course have had huge amount of growth in terms of alternate energy, etc. But Navneet, how and you spoke about global warming. You spoke about how, in spite of all the noise, there is a space for this, and we need to be conscious of it. Talk to us a bit about energy transition, especially in the India context, Navneet. How is India gearing up for it? Which industries might get impacted by it? Are we really up to it? Is there something more that we should do?
No, of course, the energy intensity of India has come down. I mean, for every dollar growth in GDP is requiring lesser amount of oil relative to where we were 10 years back. And I think that's credit to what we are producing here. And second, also what the work that we have done on the usage side, on the efficiency side. And last year, my person of the year was a new age of energy. Last year was the first year in human history where we produced more from renewable sources than fossil fuel. And it is not only what's happening on the solar side or on the wind or hydro, but the whole solar cell technology is improving at an accelerated pace. I think in between 2010 and 2025, the cost of producing solar energy would have fallen by 70-80%. Wind would have fallen by like 50%. The energy storage, which was like a big challenge, because one of the argument against renewable has been like how do you store it, and then you still need like a large amount of base load. But the storage technology is improving materially, and I think now we have reached a tipping point where in next 5-10 years we'll make significant progress on that. I won't even go to, let's say, where Elon Musk and some other people are talking about producing energy in space, but even like what's happening currently in various parts of the world, I think are very, very encouraging. India had this Shanti bill, so opening up the nuclear sector to private sector, and at a micro level, I think what we can do on the nuclear side. So I think it's all very, very encouraging. And imagine when the cost of energy goes down, and there are many, many, let's say, what it does to manufacturing of many things, what it does to transportation, what it does to computing, many things. I think the energy is like a very large part of the cost of many things. What it can do to world is just unimaginable. This is like the fourth, people call it the fourth industrial revolution, where the cost of computing, the cost of power, and all of that kind of like communication and all of that goes down substantially. And then we are, I mean, it may sound like too optimistic and too, I would say, positive, but that era of abundance is not something that we cannot visualize. Yeah.
Interesting, Navneet. Navneet, I'll go to a question that is coming from one of our viewers, and which is Mr. Shushim Banerjee, and he's asking. I'm paraphrasing here. Rupee is getting weaker. Does that then impact our exports in the long run? And then, of course, with trade uncertainty, what are the impacts that we see on overall Indian economy?
So rupee has got undervalued now. I think rupee was like stable for a period, and then of course because of the tariffs, the higher tariffs by the US, and the other global reasons, the excess capacity of China, etc. If rupee weakened, then it's not bad for the exports, right? I mean, it's an additional lever for the Indian exporters against, let's say, the impact they would have got from higher US tariffs. Uh, in the long run, I think the rupee reflects the inflation differential between two countries. In the short run, a lot of other factors dictate it, which includes like capital flows. We had two successive years of negative BOP, negative balance of payment. FPI flows have not been good on a net basis. FDI gross basis flows have been decent, but on a net basis, because lot of MNCs who listed here, or a lot of the private equity and VC who sold their stake and got the companies listed, money has got repatriated. So on a net basis, FDI flows were not good and FPI flows were not good. And as I said, that exports got impacted because of the global environment. So a weaker rupee in a way is like a cushion for the exporters. I think now on a real effective exchange rate basis, rupee is undervalued, and maybe for a global, I don't know about the near term. It's always very difficult to predict given the evolving situation. I don't know where the crude oil could be or what the impact on global trade could be for next few months, but structurally, if I think it's got undervalued, and maybe for a global investor investing into India, one, that market valuations are lower, and second is that entry from a dollar rupee perspective has become better, so that should encourage investors to look at India positively on a relative basis, where it was, let's say, a few months back.
Ravneet, so you obviously have always been optimistic, and you always talk about India and India's opportunity in a manner where we are doing good and we'll do better from here on. And even in today's conversation, a lot of what you're saying is that is beneficial to India. India can capitalize on what's building up. But if you were to paraphrase and look at some of the structural elements of India, to tell us how India really stands in this obviously fairly volatile global economic markets. Does India really have the resilience that you've been talking about? And if yes, what are the things that you think are really making it resilient at this point in time?
So from a geopolitical perspective, I think if you look at, I mean, a prime minister was in Israel. Iran has been like a friend for centuries, millennia. I mean, there is a huge India-Persia relationship that goes back, I mean, generations. We are very friendly with Russia. You know, the visit of the president here, and on the other side, look at several positive developments on India-US relationship. So I think India is geopolitically has behaved, I would say, in a highly mature, in a very pragmatic manner, in a manner that I think we are rightly placed, and have been managing our relationship pretty well with almost everyone, and while ensuring that our national interests are always at the priority. So if there's an opportunity of buying cheaper oil, we have taken advantage of that. If there's an opportunity for sourcing technology, we have taken advantage of that. If there is an opportunity to build more defense by partnering with the right partners, we have done that. So from that perspective, we are in a good shape. From a balance sheet perspective, as I said, that we have fortified our balance sheet. So be it like on the fiscal side, we continue to move towards more fiscal consolidation, lower debt to GDP. Whether you look at on the inflation targeting side, what RBI has been doing to ensure that inflation is anchored around consumer price at 4%, which is one of the best thing that an investor should look at. And the external side balance sheet, the external debt to GDP has come down from 23, 24 to now 19%. We have, if you look at the FX reserves as the number of months of import. So I think, and of course, the banking sector balance sheet and the corporate balance sheet has never been in as good a shape. So so let's say if you go back in 2008 crisis, in 2013 global crisis, or 2016 China and some of the emerging markets, etc., or the COVID, relatively, I think we are in a far better situation than where we have been earlier. Uh, I think there is no, I mean, there are very few countries in the world who are building the physical infrastructure at the pace that we have been building. said that we should get another Oscar for RRR, which is not the RRR movie, but roads, railways, renewables, and the PAN, which is like ports, airports, network. Very few countries in the world are building the way we have been building on the social infrastructure. Technology is giving us an opportunity to leapfrog. We didn't have bank branches, and now everybody has got the branch in the pocket through the UPI and other things. We didn't have computers, we straight moved to a smartphone. We didn't have telephone, we straight moved to mobile phone. So, and now with the AI and other things, it's giving us opportunity to do things in education, healthcare, skilling, etc. And digital, of course, in a short period of time, we have moved from the most data poor society to the most data rich society. We're doing a lot of very interesting. In the interest of time, I'll keep it short, but we're doing very interesting thing on the overall social security, from like basic the quality of living, because that's what is important to take advantage of millions of maybe the whole demographic dividend. So it's very unique what India has done at $2,500 per capita, like a free toilet, basic food grain. I mean, you have a solar pump, your basic electricity, one LED bulb, Ayushman Bharat, I mean, a cooking gas, tap water, and all of these. The way we have delivered in like 8, 10 years, in a highly targeted manner at a very low cost to the fisc is very, very interesting. So there are a lot of these positive, but of course there are challenges. The global environment is highly uncertain and volatile, and we cannot remain insulated from that. We have seen last whatever couple of months, and I mean what can impact. And of course, I think we are still at $2,500 per capita, so a long way to go.
Indeed, Navneet, a long way to go. We One of the concerns that have come up, especially over the last few years, has been the rise of consumer debt in India. We, of course, have always seen consumption as a key growth theme. I think our population, the demographics of the population, the increase in employment rates, all of that have been drivers of consumption. But the rise of consumer debt, give us a perspective if that is something that one should really be worried about, or is there another way of looking at it as an opportunity? Obviously, there has been a lot of conversation around banks, obviously how they control this debt. But from a broad economy point of view, where does this really land us up?
No, so Seville, you are right. I mean, RBI has written about it in some of RBI's publications. They've talked about the increase in household debt to GDP, increase in household debt to their household income, household debt to household wealth, etc. And all of these indicators are showing increase. It's just that we have started from a very low base, and we are a young population and we are a growing country. So if you have, let's say, a 6, 7% real GDP growth, you add few hundred basis point of inflation. If you are growing at 9, 10, 11% in terms of nominal GDP, and you have a young economy where people are working and growing their incomes, then you have an ability to pay, let's say, relative to a developed country where incomes aren't rising at that pace, and the debt level, so the starting point is higher. But having said that, I mean, there are cycles, and there are three balance sheets that borrow money to create growth, right? There's a government balance sheet, there is a corporate balance sheet, and there is a household balance sheet. Post 2013, 14, I mean 13, we had a crisis, the famous twin deficit and all the challenges, and the government embarked on the path of fiscal consolidation. So they said that we are going to take less leverage, but then 2020 happened. In the COVID year, government had to have higher fiscal deficit, which they would kind of have envisaged. But again, now in a year or so, we have embarked on that. So government is saying that I'm going to borrow less and less as a percentage of GDP. The corporates repaired their balance sheet after the crisis. At the same time, now of course there is like more and more cash getting buzzed up in the corporate balance sheet. Now in the last 10 years, where government is rebuilding the balance sheet, the corporates are rebuilding the balance sheet, and now they have more cash. Somebody had to take the leverage, and households didn't have the leverage at that point in time. And maybe a confluence of other factors, which is like easy liquidity, which is the digitalization, where let's say a billion people got inducted into mainstream finance system, the online GST, the CIBIL framework, and all, which made it easier and for households to borrow money. So earlier you needed like a collateral, like a house or something else. Now you can borrow against the transactions, because somebody can look at the data, social media, and many other things, and can assess credit better. So that was a like segment of the economy which was willing to borrow and had to borrow that money. But again, as I said, cycles. Maybe I think in the wisdom, RBI has more wisdom than all of us, and if they are saying that maybe it's gone up and we need to have more prudence on that side, I think they've already taken some steps.
Yeah.
The other interesting part is the rise in the gold value. So I've always said that gold doesn't create the wealth effect like other assets. If you have stocks and prices have gone up, you end up spending more even without selling and booking profit because it gives you a positive wealth effect. Gold doesn't give you because in Indian psyche, people think that my next purchase is going to be at a higher price. So you feel
Yeah.
poorer when gold goes up. But what it does is that it gives you a great collateral to borrow money, and that's why you are seeing like increase in the borrowing against the gold. Yeah.
Indeed, indeed. Lavit, we have to bring you down to the last 5 days. The Middle East crisis. I think in many ways India perhaps has reason to worry. One, because a lot of Indians are caught in that crossfire in the Middle East. Um, uh, so so that's one. Two, of course, is that like we were mentioning earlier, I think a lot of Middle Eastern countries have been supporters of India. We've had very strong trade relationship with them. Strait of Hormuz, of course, covers what 60-70% of our oil supply comes in from there. So there are reasons to worry. But Navit, what's your perspective? Is this a long drawn war? Is this a short term war? Eventually, where do you see things will settle down? Of course, nobody knows what will really happen, but a bit of a perspective could help our viewers.
J.K. Galbraith famously said there are two kinds of forecasters: one who don't know, and the second who don't know that they don't know. I think we are in an uncharted territory. As I said, that world has not been like this the way it has been, and I think there was a lot of predictability in let's say the global powers, the way institutions got built, whether G7, G8, G20. I talked about, let's say, whether it's NATO, whether this was like all the, let's say, UN, WTO, WHO, UNESCO, I mean NATO, all these institutions got built in a certain manner. They provided, I think, a lot of other accords, etc. The way global financial system, global political system, all of those got built in a certain manner. In last few years, we are seeing like massive breakage of all of that. In some shape, it'll evolve over a period of time. It's also the great, the power war. We came out of a cold war, but now this is like the two rising powers, US and China, economically, militarily, and in whichever way you look at it. The great power shifts are never like normalized. So we are in a new transition. I know this is my strong belief that the axis of power is shifting from west to east and from north to south, and India is going to play a much bigger role. We are the like largest and mother of democracy. 1.4 billion people, such an amazing multi-ethnic, multilingual, multicultural society. We will be a role model for the world. But I mean, when so many elephants are fighting, I mean, everybody gets impacted, and there would be implications on global economy. There will be implications on the whole global political system, so on and so forth. But I think relatively we are in a good place. We are the oasis of hope for everyone, and that's why I said that everybody wants to align with us. But it's so unpredictable. Think about it, like one person does something tomorrow and presses one button, and what it can do to the rest of the world is highly unpredictable. Yeah.
And
But
however, within sorry.
we need that there is an investment cycle, because all of this is leading to, as I said, more defense spending. Given all of these, like what's happening on the climate side, there is going to be more investment in many industries to adapt to the new reality on the climate change. The supply chain, onshoring, friendshoring will lead to like more capacities getting created over the next several years, and the whole AI and quantum computing disruption, which will lead to more investments everywhere. So while there'll be disruptions, but underlying forces of new investments are very, very strong.
And India, Navneet, you believe would have a large role to play in the revised world
We
and
are
economic order.
18% of humanity, and it actually that percentage will increase, because what will happen in next 75 years, because of the one child policy, the China's population will fall from 1.5 billion to 750 million in like one generation. The person who's born today in China is going to see in the same life population of the country going down by 50% or so. And so is the case with many other countries in the world. Of course, at some time, India is likely to peak and then will have declined. But as of now, for next 10, 20 years, we are in a sweet spot. So despite all the AI in the disruption, which will have in many job markets, and it's going to be a brutal one, we must be ready for that. But at the same time, there are going to be many newer jobs going to get created, and Indians are the ones who knows this whole India EU trade treaty. I mean, EU is going to face a massive challenge of like shortage of workers of all kinds. India will be a supplier. One day, maybe Japan will have to open up. Unthinkable, absolutely unthinkable today. But one day they may have to open up, and people would generally be like, I would say, relatively, I think I would say, would like Indians relative to many other parts of the world. Yeah, more trustworthy, more hardworking, and more friendly.
Super. So on that very very optimistic note, Navneet, many thanks for giving us time this afternoon. I frankly didn't realize that we already spent nearly an hour talking, but very engaging conversation as usual. Your perspectives are sharp and very wide. They are not only concentric on India. They have a much larger view. So really appreciate that, Navneet. And to our viewers, of course, thank you for joining us. We look forward to catching up with you, Navneet, again very soon on something even more interesting than this. Thank you. Really appreciate your time.
Thank you so much, Cyril. Always a pleasure. Thank you.
Thank you. Thank you. And thank you all for joining us this afternoon. Thank you.